turn to what you and you get rejected, you work instead of having a cocktail.
Lavish ones, some of the solutions.
Considered to be the or, even though you set up a neighborhood killed so easily. So that's very important.
So, you want to start your own business. You're out in the marketplace to raise money, and every step is critical. We're here to share some do's and don'ts of that process. Is entrepreneur and investor Cristian Ossa. Cristian, thanks for coming on board and joining us this morning.
Thank you very much for having me.
That's a very difficult process to step out there and raise money and convince people to give you their money to live out your dream. What do we do that's wrong in the process?
I think when you look at a lot of entrepreneurs, the way they look at raising money is that they forget their business. So they have an idea, they write it on a napkin, they get excited about it, talk to a few friends, and they've seen too many TV shows, and they go, now let's run out and get some money. Well, they forget their business in that process. They forget what they really set out to do. And me as an investor and even as a mentor, sometimes you see other companies and you say, what have you been doing last 6 months? Well, we've been raising money. Well, that's not your job, is it? And they kind of look at you a little bit like, well, that's been our job. And well, what happened to this great idea to, build a better mousetrap or change the universe? And I think they lose sight of the core of what they were doing when they're in the process of raising money.
I would imagine you run into people who have a very good idea and they come at you at a stage where they haven't flushed out all the research. So they're saying, oh, I got a great idea, I want to make these widgets, we're going to do this, give me $1 million. And you say to them, well, where's your marketing plan? Right.
I think if you take turn it around for a second, you look at what entrepreneurs are doing is they're turning $1 of investment into $2. So as someone who invests in their company, I want to see them turn $1 million into $2 million, and it goes from there.
Or 4 or 5.
Or $4 or $5 million, yes. And I think what they do incorrectly is they haven't proven their idea yet. So it's back to they write an idea on a napkin. They've got a brilliant idea, but they've done nothing to show that it can actually be executed.
So proof of concept.
They've done no proof of concept. And yeah, to your point, that's exactly it. The proof of concept is critical when you're raising money to show people, hey, I can turn $1 into 2. Can you help me turn $1 million into 2 million?
What's the benefit? I'm guessing there's a big benefit to finding people who are already doing what you're doing or something close and allying yourself with them, as opposed to, if I'm making baked goods, go to a guy who invests in medical products and ask him for money.
Right. And I think, I know we've talked about this in the past, what you want to do is you want to find organizations, either angel groups or venture capital groups, that are in the same line that you're in. So for example, one of the angel groups I belong to invests in technology. Well, if you're a new food, that's probably a bad place for you to spend your time pitching. There's angel groups interested in women. There's angel groups interested in Latinos, African Americans, etc. Depending on the type of business, there's the food-trepreneur, I believe is the term, where if you come up with a new food product, you go down that route. So I think it makes a difference of where you look. You don't want to waste your time.
Sure. And waste the other folks' time as well.
Correct.
I would imagine that makes you look pretty bad.
It does, and you're not going to get the money at that point anyway.
Let's talk about, how do you show an entrepreneur that you can turn that $1 into 3 or 4? Sure.
How do you show the investors? Well, again, I think it goes back to the proof of concept. If you've got your proof of concept working, and you've got, let's call it the wheels of your business, okay? So you're buying some product, you've got your goods, your initial cost of goods, you're adding some value and then reselling it, and in that process you've made money along the way. As an investor, I get it. The little light bulb went off. I said, oh, you can sell, you can make it, you can buy raw materials, and you can sell it at a profit. I get it. Now the profit might not be so much, but I can make it bigger. You can
do the multiplier.
I can multiply. If you're buying raw materials and doing something and selling it as a loss, and you tell me, but we'll make it up in volume, like in the old .com days, nobody's going to buy that.
Are there red flags in a pitch that you look for?
Oof. Okay, there's always a couple of red flags in a pitch. I think when you ask someone about their market, they don't know. The kind of research that they've done, I think they don't realize who they need to talk to. An immediate red flag is, I'm an angel investor, or I'm a venture capital company in a technology investment group, and somebody's pitching us food products, like you said earlier. They haven't done their homework. This isn't a good fit. Completely turns me off.
Okay.
And then I think over-exaggeration is usually the biggest culprit, but we expect some of that from, I was an entrepreneur, and you know, everybody embellishes a little bit, I think is fair to say.
Everyone thinks they're going to make $1 zillion.
I hope they do.
Thanks, Cristian, for coming on board. We'll have you on next time to talk more about entrepreneurship.
Thank you very much.